So, hello, and a massive hello to everybody. Hope everybody's having a great weekend wherever you are, whatever you may be doing. This is 50 Pips, rocking and rolling here, 5th of August, 2018. No trade calls, recommendations, response for their own stuff. We're here for educational purpose only. So, what's happening is we're going into, these two middle of August weeks, which tend to be a little bit slow. We'll have to see what happens. I still think the main risk, as we've been talking about, is news headlines out of Washington, out of China. We've been going off like a broken record on this. Market's very complacent. Basically, I think the way things are going is as long as U.S. markets are going higher, and as long as USD CNH is going higher, Trump's just going to keep on raising tariffs, right? I really don't think he cares. I think he's just going to keep on raising, right? So the two issues to keep in mind are the stock market and USD CNH, right? As we've been discussing, but we think it's just a matter of time before we get some kind of comments on the dollar strength in general, especially if it breaks higher. But the big risk is that, the market keeps on trying to ramp, and then we get more escalation of these tariffs. And then the market starts to realize that, there's a lot they're not pricing in. The other big thing is if you see all the data, the big question is, or I think the big question everybody should be asking themselves as we've been discussing this week in the weeklies is this as good as it gets in terms of the economy? Has the business cycle peaked? And I think the data points going forward might shed light to the fact that we may have just seen the best data points come out. Now, going into this week, nothing huge. We have some big Canada data at the end of the week, but we have RBA and RBNZ. But I really think the issue is the whole thing is about event risk out of Washington, China, all the tariffs. So what's going on? Let's look at some of the charts. Here, in terms of the equities, we've been looking at the NASDAQ, right? And you see what happened is we're kind of hovering here at highs. And if you look at the weekly, what happened? We closed last week, 2 weeks ago, with that heavy close at highs. And here, we've just kind of undone that. So just basically indecision. I think you can still read this both ways. I think you have to keep in mind that the volumes are really anemic. So I wouldn't really read too much into it. I would still err on the side of sideways to heavy, even though it might have to probe higher. Now, as we've been discussing, the ES volumes have been anemic. As long as it holds above the 2800, there's really not a lot to do. It'll hold some kind of a bid tone. And the NASDAQ, we're getting a lot of funky action. If you look at the NASDAQ for a week where we ended with a strong ramp here, look at what's going on kind of under the hood. There are a lot of charts, right? Look at Netflix, all these kind of pseudo social media or new FANG stocks. Look at Netflix, right? It's just something not healthy is going on in the market, right? We had this gap down, which is about 12-13%. If you look at Facebook, we had this gap down. Was it about 20% gap down? What else did we have? I'm probably going to forget some, but Twitter. Yeah, this is a gap down here, about 12-13%. This is not the sign of a healthy market, or it's not the sign of all is clear under the hood. The other thing, I'm kind of losing my train of thought here, but as we said, look at what's going on around the world. Like, look at the Shanghai, right, on the comp. It's still holding very heavy, right? Despite the fact that the markets are, some of these a lot of these emerging markets, a lot of the currencies are just getting really hurt very badly, So you have to keep that in mind. Look at something talking about social media, new tech stocks. Look at Tencent, down 20-30% this year. It's not the sign of everything's rosy, everything's going well. So you have to keep that in mind. It doesn't mean you have to, panic, but you have to keep that in mind. So going back to equities, what we're saying is for a NASDAQ where we closed the week strong, right, on that weekly, pressing up those highs, well, look at how Amazon closed, right? Fairly lackluster. Look at FANG in general. Still hovering at this pivotal point. So I really don't think you can, seeing the data points that are coming out, seeing the price action, seeing the volumes, it doesn't mean it can't break higher, but I'd be very, very cautious here. I think you really have to be cautious. The velocity of move is clearly, risk is to the downside. Now, if you look at some of the other charts, some of the biggies, because if we look at the main markets, so look at bonds, ZBs. I've actually flattened out my short exposure on bonds. Here, we talked about this in the webinars too. We had a very nice chance here with a very tight risk reward to play for this continuation down on the bonds, and we got fairly tight risk. We got a nice move, but I flattened out on Friday simply because it looks like it's trying to base. You can argue there's some kind of basing here, and I think the risk is, at least short term with some negative headline, is to see a little bit of a bid come in on the bonds. So I would say it looks like they're trying to base a little bit. If you look at crude and it's not loading for some reason on the COMEX. Let's see. Crude and let's look at crude and gold. So on crude, no real change as far as we're concerned. You had all this topping pattern at the 75, which was our top of the range, and we're looking at short opportunities here, but we didn't really get a nice trigger. But once we broke here, did not trade this, it moved too fast, didn't want to chase. Our base case is that we had to come back into this 66, 62 level. Now remember, the 62 level, that's a very, very big level on the weekly, a major pivotal zone. So our base case is still that as long as it doesn't get traction below here, it should stabilize to try to ramp up a little bit more. But we wouldn't be surprised to see it stuck here inside this range, 72 to 66s, unless we get some kind of headline. But if any time we see this trade below the 62.50, then we would not be surprised to see this retrace the 50 back of this whole move. So we wouldn't be surprised to see it back in the low 50s. And in terms of gold, this is another interesting one, as we've talked about, as we're going into interesting seasonality and we're pressing into these 1200s now. This is the bearish the market has ever been on gold max short positions, and we're hovering just ahead of this 1200. Look at how aggressive this move is down, pretty much straight down. It's about 12% straight down. So again, anything can happen here. This can puke. No change in our outlook. We're looking for some kind of a base to form here for this to start rallying, possibly all the way into the 1300. If it closes from the day or the week anytime above the 1300, our base case is that it's going to come out and take out these highs and try and move into the 13,000. If it gets daily closes, weekly closes above, our base case is that something's happened. We might get some headlines and this is going to rip back into the 14,000. But if not, it would just be a corrective bounce. But here our base case is still no shorts here, looking to build some kind of long exposure to go into this also favorable seasonality going in the next couple of months. So that our base case hasn't really changed here on crude. Now, that's what I forgot. What we're sorry, a bit all over the place, just getting so many things I wanted to discuss today. Our base case is that the equities are tricky, and our guide for us, the most interesting chart is the Russell, right? In the same way that in terms of the way tech broke, we said we're going to focus on Netflix, and that's going to be our guide for the bigger picture on the NASDAQ. Gap down. We said this is something major happening. You need to, if anything, you short the 50 back pretty much the pip, and here we're extending lower. So this is, unless this manages to recover the gap and hold bid, any ramp on the NASDAQ, any ramp in tech for us is going to be suspect, okay? And in terms of the equities, the way we're looking, so we're using, you can say, the Netflix as our control chart for tech. And in terms of the whole market and the equities, our control chart is the Russell, right? We've talked about this a long time. All these negative closes, our base case is still that we're coming back to test 1619s. A very nice asymmetric risk reward on this trade. Now, should this trade below the 1619s, we've got a lot of other targets lower, but that's too early for that here. So keep an eye on what happens in the Russell. Should the Russell start to rally with the other equities catching a bid, should it break above this descending trend line, then we would be extremely cautious about trying to hold any kind of short exposure in any of the equities, because chances are we get a real aggressive rip across the board. So again, we're using the Netflix as our control chart for tech and Russell as our control chart for equities. Now, what else did I want to talk about? Okay, well, yeah, that's what we haven't talked about. DXY. So DXY, we're still hovering around this 95 mark. As we said, unless we start to get some good daily or weekly closes above, it's very hard to read too much into it. It's just still hovering here. See, every time it's tried to probe above, you've got these smackdowns. So it's really not a high odds play to try and get long into these weeks. Now, is it strong? Yeah, sure, it's trying to bid, but unless it can attract new buyers above these wicks, chances are the velocity of move in terms of greater velocity is still to the downside. So we'll have to see how the week shapes up there. And if you look at things like, for example, yen on the weekly, you can see our base case is still that it's trying to complete this channel, continue along this channel. We'll have to wait and see. And if you look at, let's look at Aussie and Kiwi, since we got those rate decisions coming in this week. See, yeah, it's just hovering there, right? Is it waiting for the next DXY headline? Is it waiting for the rate decision? I think most people aren't expecting too much, but clearly this is what, 1, 2, 3, 4, 5, 6, 7, about 7 weeks trying to base here. Everybody short pressing this hard. So either the rate decision gives us something to be extremely bearish, and all those bears are going to get paid with a big flush, and then this could get ugly to the downside. But be careful, any reason for these bears to cover, any press lower and flush unable to hold below the 73, there's an off, the market is positioned aggressively short, and there are a lot of bears that need to flank up. So the risk is for an explosive move to the upside if we don't get any follow through. And Kiwi's a little bit heavier than the Aussie. If you look at it on the weekly too, it's just hovering below. If you remember, longtime followers know we've been using this range to trade since well before last year. So shorting failures of these highs, trying to get long into these lows, and looking at this as some kind of a pivotal area in the middle of the range. So here you see how we're holding below. So this is heavy, right? All the shorts have absolutely no reason to cover here because there's a lot of room to run to the downside. But if this can't get any traction, then do not be surprised to see this rip back higher, a couple of hundred pips, if shorts need to cover aggressively. So that's pretty much what I would be looking going into the week. Sorry for being a little bit all over the place, but there are a lot of moving parts and a lot of interesting things to discuss. So it's always tricky to try and boil everything down to a short video. So have an awesome one. Again, thank you for following. Thank you for sharing. Thank you for liking. Hope everybody has a great August, and hit me up on Twitter if you want me to post any chart. Have a great one. Take care. Bye-bye, guys.